हेलो फ्रेंड्स। इस सेशन में आपका स्वागत है। आई वेलकम ऑल ऑफ यू इन दिस सेशन। नाउ इन दिस सेशन ऑफ बिजनेस टैक्स, yes, and this wonderful subject of business tax assessment and planning, we are going to today learn as to what all things could be asked from the exam perspective. So are you all ready for the session? Just confirm to me once in the chat window. Are we all ready? I can see. Yes. So basically, would you like to know that what type of questions would be asked in the exam? So till now, what we have done in business, this paper, business tax assessment and planning, we will see. So first day or first few sessions, we have already seen the syllabus. So I hope all of you understood the syllabus. There are 4 units. All of you understood that. After that, we immediately have seen the concept of tax planning versus tax management versus tax evasion. Do you all remember this? Tax planning versus tax management versus tax evasion versus tax avoidance. So I hope you have all understood this. You have seen various cases of this various cases of this, and you learn to identify that which case will be called as planning, which case will be called as management, avoidance and evasion. Apart from that, you have seen meaning of all these things, meaning and difference. Yes, I had given you one detailed note on planning, management, avoidance, evasion. Do you agree with this? Then after that, we came to one single conclusion that what type of questions can be asked to you will be basically the cases of tax planning. Cases means what matters is tax planning. What will be taught to you in detail is tax planning, because tax planning means minimizing tax liability in legal way. Okay, so in tax planning we have seen one case yesterday. Do you remember what is that case? That case is tax planning with respect to financing options. Remember that? Tax planning with respect to financing options. Friends, yes or no? Not getting reply from any one of you. Tax planning with respect to financing options. So in this, what you have to do, you have to select that financing option where dash is highest. What should be highest? So in tax planning with respect to financing options, you compute what you compute? You compute return on equity share capital. Do you agree? You compute return on equity share capital and select that option where this return on equity share capital is highest. Compute return on equity share capital and select that option where return on equity share capital is highest. So far so good. All of you are comfortable. See why we take the lectures, so that you all should be ultra comfortable with the whole syllabus. So my simple question to you right now is, are you comfortable till this point? Yes, very good. So now what we will discuss? Now we will discuss what type of questions will be overall asked in the exam. Okay, and then we will do our preparedness for those questions, and we will see to it that you understand the concepts well in the practical sense also, and you are able to apply them in the exams questions also. So see, overall syllabus I'm saying, for overall syllabus I'm saying, so one type of question could be Difference between planning, management, avoidance, evasion. Okay. So one type of question could be concepts, concepts, similarities, differences between tax planning, management, avoidance. And tax evasion. So will you be able to handle that, friends? Tell me very honestly. One. Second type of question that could be asked is, okay, on TDS, tax deducted at source, TDS on various payments. So this is of course pending. We have not yet done anything on this. Third, MAT. What is MAT? Yes, minimum. We are going to do this today. Minimum alternate tax. Minimum alternate tax. MAT. MAT for whom? MAT for companies. So we are going to do this today. Okay, so each question which I am talking about right now has a potential of being asked for 15 marks. Next, next category of questions is, you know, select most beneficial financing option. Selection of most beneficial financing option. So will you be able to do all these things? So this already we have covered, and I would say this also we have covered. This we are going to do today in today's session. We are going to start with that and do a lot of practice on that taxation of companies. Then fifth type of question is based on unilateral relief. Unilateral relief. Unilateral relief is discussed in section 91 of Income Tax Act. Okay, so we'll do that as we go ahead. We will do that. Then arm's length price. Arm's length price, or you can say transfer pricing. Or you can say transfer pricing. Very basic questions on this. That's it. This is your type of questions that could be asked in the exams. So if you are ready, we will do minimum alternate tax today. Are you ready? We will be able to complete this 15 marks question today. Already done this. Already done this. Yes, very good. So let's start. Let us start. Minimum alternate tax, which we call as MAT, which is discussed under section 115 JB of Income Tax Act. Of Income Tax Act, of course, 1961. So this comes under assessment of companies. Okay, this is a topic under assessment of companies. So for the first time in your life, you are checking assessment of any person other than individual. At BCom level, you have done assessment of individuals. Same way in the first sem, you had done assessment of individuals, isn't it? For the first time, you are checking assessment of anyone other than individuals. Okay, assessment of companies means how company will be paying tax, how tax will be calculated for companies. That is called as assessment of companies. So shall we start? So when we talk about company has to pay tax, okay, by following 5 steps. How many steps? 5 steps. So compute first step is compute total income. So first what you should do, you should compute total income, that is nothing but taxable income as per normal provisions of the act. As per normal provisions of the act. Is this point clear? What you should do? You should compute taxable income as per normal provisions of the act. Normal provisions of which act? Normal provisions of Income Tax Act. Clear? Means salary. Of course, company will not have salary. PGBP, capital gain, income from other sources, gross total income, deductions of chapter 6A, you will get total income. That's the first step. Second step, compute tax. Now you will compute tax on above, means on total income. You know at what percent? At normal rates. Anyone will like to guess what is the normal rate of tax for company? Means company will pay tax at what percent normally? Would anyone like to guess? See, individuals pay tax as per slabs. So can anyone tell me for companies? Okay, so compute tax on above at normal rates, that is 25%. Please at least repeat in the chat window. What is the rate of tax for companies? Okay, very good. Priyaji? Yes, 25%. Very good, Saili, Asia, Verna, Anam. Well done. Okay, so compute tax on above at normal rates, that is 25% of total income. Okay, and at 30%, when 30%, and at 30%, if turnover, not total income, if turnover in FY, means in financial year. Now we are doing the things for financial year 26-27. Sorry, we are doing the things for 25-26 financial year. So go last to last financial year. Yes. So which is last to last financial year? So last to last financial year will be, yes. All of you tell me, we are doing things for which financial year? We are doing everything for financial year 25-26. So last is 24-25. Last to last is 23-24. So you have to check turnover of 23-24. Okay. So at 30%, if turnover in FY 23-24 is exceeding is exceeding rupees 400 crores. Make sense? All of you clear? Yes. Now go ahead. You will add surcharge. What you will add? You will add surcharge. Surcharge at what percent? You will add surcharge at 7% if total income is exceeding rupees 1 crore, but it is less than or equal to rupees 10 crore. And surcharge at 12% if total income is exceeding rupees 10 crores. Clear? So this way you calculate tax. But government says, what is the guarantee that you have calculated correct tax? I mean correct tax in the sense correct total income. Or government says sometimes it happens that you take lot of benefits under income tax and your total income is on the lower side. Okay, means to pay tax and to calculate tax, your income is on the lower side, but actually your income is on a higher side. See, you take lot of deductions, so your total income goes down. So when it comes to paying tax, you don't have money, but when it comes to paying dividend, you have money. So government says go to third step and compute something called as book profits. What you have to compute? Compute book profits under section 115 JB of Income Tax Act. What you have to compute? Book profits. All of you, can you once tell me in the chat window? Because this is the new thing for companies. For like all SSEs, you calculate total income for company also. You calculate tax for company also. But what is new thing for company? You have to compute something called as book profits. Can you once write in the chat window that word? Yes, very good. So you have to compute book profits as per section 115 JB of Income Tax Act. And now what you do, fourth step, you compute MAT. What you compute in fourth step? Minimum alternate tax. You compute minimum alternate tax, that is MAT. This MAT will be computed at compute MAT, minimum alternate tax, at 15% of book profits. So government says you calculate normal tax in step 2. Can you see step 2? In step 2, you have calculated normal tax and also calculate uh, minimum alternate tax, which will be at 15% of book profits plus surcharge if applicable, based on book profits plus 4% health and education cess. Don't forget that here also you have to calculate health and education cess at 4%. So now you have got normal tax and you have got MAT. In second step, you got normal tax. In fourth step, you got MAT. Can anyone tell me, will you pay normal tax or will you pay MAT? Will you pay normal tax or will you pay MAT? MAT is minimum alternate tax. So government says calculate normal tax, calculate MAT also, and pay whichever is higher. So finally, your tax liability will be higher. Can all of you write once in the chat window? Higher. Tax liability will be higher of tax. Very good. Higher of which tax? Higher of tax under step 2 and step 4. Do you agree with me? Your tax liability will be higher of tax under step 2 and step 4. Agreed? Any doubt? Till this point, any doubt? No. Wonderful. But what happens? Understand very clearly. There is a MAT, there might be MAT credit. MAT credit means government has asked you to pay tax under step 2 or step 4, whichever is higher. Okay, but government says if you are paying that MAT, then there is some injustice on you. If you are paying that MAT, there is some injustice on you because you have paid tax which is greater than normal tax. Okay, so government says we will give you credit. Credit means, say normal tax is 10 lakhs, MAT is 15 lakhs. So you had to pay 15 lakhs, whichever is higher. So how much extra you paid? Extra you paid is 5 lakhs. This 5 lakhs will be your asset. So it will be your MAT credit. In future, you will be able to use it when your normal tax is greater than MAT. So in short, the extra tax that you pay don't get waste. So what is MAT credit? MAT credit means it shall arise. When will MAT credit arise? It shall arise where normal tax, you agreed, where MAT is greater than normal tax, then it shall arise. Okay, MAT credit amount will be how much? Can anyone tell me? MAT credit will be how much? MAT credit will be tax payable as per section 115 JB, that is MAT, minus normal tax. That's it. This is your MAT credit. You know, MAT credit, it can be carried forward. It can be carried forward for subsequent 15 years. How many years? Once write in the chat window. How many years it can be carried forward? So MAT credit can be carried forward for subsequent 15 years. Once you complete this, let me know. I will give you one question to start with. Okay, when we go ahead in the next session, we will learn how to calculate book profits. But before we learn how to calculate book profits, I want to give you one simple question, assuming you know the calculation of book profits. So when you are ready, let me know. I will give you that question. Yes, friends? Ready? Okay, fantastic. So take example to start with. A private limited A private limited has total income. A private limited has total income of rupees 60 lakhs. Okay, computed as per normal provisions. Computed as per normal provisions of Income Tax Act. Okay, this is for, can anyone tell me when we did our income tax in last SEM, it was done for which AY? Okay, so for PY 24-25, clear? We did all the things for which PY in the last SEM. In the last SEM, we did all the things for PY 24-25, that is AY 25-26. Am I right? If anyone remembers, yes. Sure, na, all of you? Okay. For individual, we did the calculation, right? What slabs we used for individuals? Which slabs we used for individuals? In 115 BAC, which slabs we used? Can you suggest me? Acha, we used those slabs. Okay. So that means we did for PY 25-26. Isn't it? We did for PY 25-26. Just check whether we did for PY 25-26 everything. That is AY 26-27. Just confirm to me. Okay. A private limited has total income of 60 lakhs. So here also I gave you. Yes. Just confirm if you have those notebooks and you gave the exams also. So all of you know that. So A private limited has total income of 60 lakhs. Computed as per normal provisions of Income Tax Act for PY 25-26. Okay. Its book profits. Its book profits as per section 115 JB is rupees 90 lakhs. Okay, compute tax liability. Compute tax liability for AY 26-27. Make sense? Compute tax liability for AY 26-27. Have you all copied the question? Are you ready now to solve it? Yes. Friends, let's solve this. Very simple. Let's solve this step by step. Your total income is 60 lakhs. Book profit is 90 lakhs. Okay, let's solve. So give the heading computation of tax liability. You want to calculate tax liability. So computation of tax liability of A Private Limited for assessment year 25-26 PY 24-25. Particulars, and of course amount in terms of rupees. If possible, make two amount columns. First step is total income. So can you tell me what is your total income? Your total income you can take in second amount column. It is given as rupees 60 lakhs. All of you agree with me on this? After total income, go for second step, that is tax liability. You are now calculating tax liability as per normal provisions. Yes, can we calculate tax liability as per normal provisions? So in that, what is sub point 1? In that, sub point 1 is tax at 25%. You can see now that turnover of the company will not be exceeding 400 crores in last to last year. Impossible, because total income is so less, 60 lakhs. So you will take at 25%. So what is tax at 25% on 60 lakhs? Calculate, friends, and tell me, are you all getting 15 lakh rupees? Just confirm. Now, since your total income is not exceeding 1 crore, you will have to pay, you don't have to pay any surcharge. There is no surcharge. Directly you will calculate. So add health and education cess at 4%. So what is your health and education cess? Are you getting it 60,000? So are you getting 15 lakh 60,000 as answer of this second step? Just confirm when you get answer of second step as 15 lakh 60,000. So you have got total income, you have got tax liability. Are you ready for third step? Yes. So third step is book profits. So what are the book profits? What are the book profits under section 115 JB? Book profits under 115 JB they have given you is 90 lakhs. So friends, now on this 90 lakhs, can you calculate MAT, minimum alternate tax, is at what percent? It is at 15% of book profits. So what is it? Isn't it 13 lakh 50,000? Are you all getting 13 lakh 50,000? Add in that, there is no question of any surcharge because your total income is not exceeding 1 crore. Rather, your book profit is not exceeding 1 crore. So there is no question of any surcharge. So directly add health and education cess at 4%. So what is that? Are you all getting 54,000? So what's your final amount that you're getting of MAT? Are you getting 14 lakh 4,000? Friends, are you all getting 14 lakh 4,000? Yes. So what tax you are paying? Are you paying normal tax or are you paying MAT? Are you paying normal tax or are you paying MAT? Yes, friends. What is higher? You have to pay that. So in this case, you can see that normal tax is greater. Yes or no? Very good. So fifth step will be therefore tax liability. So tax liability shall be higher of tax under step 2 and 4. So isn't it 15 lakh 60,000? That's it. So did you understand how this works? Friends, once you have completed this, say see in the chat window if you have understood this. Very good, Prerna. What about others? All have joined now? Yes. 6 of you have joined. No problem. Immediately after this session, I'll be putting recording also on the group. Okay. Shall we go ahead? Now I will tell you how to calculate book profits. Question is now how to compute book profits. Now what is book profits? What is book profits? Yes, any idea, friends? What is book profits? Book profits means nothing but the NP which you have got as per your P&L account. Do you agree? The NP that you have got as per your P&L account is book profit. On that book profit, you have to pay minimum alternate tax. But we may not directly accept that book profit. Why? Because that book profit businessman has calculated, the company has calculated. So they may have debited unnecessary items. Because of debiting unnecessary items, NP would have gone down. Do you agree with me? So unnecessarily whatever you have debited, you will add it back so that you get proper book profits. Are you getting what I am saying? Yes, no? So see, actually what government is trying to do, in first step they are trying to ask you to calculate total income, means normal as per income tax act. What is your total income that you are calculating in step 1? In step 2, you are calculating normal tax on that total income. In step 3, you are computing what? You are computing book profits. Book profits means what? It means NP as per your P&L account. Okay, because government is bit bothered that if you declare, if you have lot of uh, normal profit, you should pay tax on that at 15%, which is called as MAT. But now government ensures that you calculate this book profit correctly. So shall we discuss how to calculate book profit? So to calculate book profit, you start with A point, NP. NP as per what? NP as per statement of profit and loss. NP as per statement of profit and loss. Do you agree with me? You will calculate NP but as per statement of profit and loss, and you will take it in second amount column. Then you will go to B point. You will add. What you will add? You will add all those items which you have unnecessarily debited. Government thinks because of this your NP has gone down. So you should take your NP up. So this is called as add items as per explanation 1 to section 115 JB. Did you understand what it is called as? Items as per explanation 1 to section 115 JB. So now, what all you should add? Okay, check. What all you should add? Check. First point, dividend. Dividend or proposed dividend. Means what? See, uh, dividend or proposed dividend which is debited, that you should add. Now actually tell me, what is dividend? Is it expense or is it distribution of profit? So as you all know, dividend is distribution of profit. It is not an expense. All of you agree now with me? So what has happened? Unnecessarily, if you have debited dividend or proposed dividend in P&L account or statement of profit and loss, your net profit has gone down. So government says this is not correct. Unnecessarily your NP has gone down. So unnecessarily your book profit will go down. So unnecessarily your MAT will go down. So government says please add back so that your book profit is shown at the correct figure. So this is first one. Second, what you should add? Second, you should add amount transferred, amounts transferred to general reserve, general reserve or any P&L account. Means what? Means what? What I'm asking you to add back. You have debited some amounts. Okay, you have transferred some amount to general reserve and P&L account. So these are actually not expense. This is how you have divided your profit. This is how you have distributed your profit. So that also you will add back. Then next, provisions for provisions for unascertained means unknown. Unascertained means unknown. So unknown and undetermined liabilities. You will add back provision. You all tell me, provision is actual expense or expected expense? What do you think? Provision is actual expense or expected expense? So provision is expected expense. It might happen, might not happen. Exactly. So government says if you debit such thing, then you please add it back. So provision for unascertained liabilities also should be added. Provisions for diminution. Diminution means depreciating or minimizing. So provision for diminution in value of assets. Provision for diminution in value of assets. Okay. Provision for diminution means taking down the value of assets. So provision for diminution in value of assets. Okay, example, have you heard of this? Of course, you must have heard of this. Example, provisions for bad debts. Agree with me? Provision for bad debts. So this also you will add back because this is not actual. This is just a provision. Next, friends, have you got it till this point? Income tax. Provision for income tax. What is income tax? income tax is a expense, or is it distribution of, or you can say apportionment of profit? So it is an apportionment of profit. It is not an expense. That's why if you have debited any income tax, you should add it back. Then you should add back depreciation debited. Yes, you heard it right. You should add back depreciation debited, because this might not be correct depreciation. Hence, we are asking you to add back depreciation debited. Then there is something called as, um, you know what? Deferred tax. Deferred tax. That deferred tax also you should add. Deferred tax provisions you should add. So is it clear till this point? Yes, no, friends. Only Sailij is replying. Now Asiya ji has also joined in replying. What about others? So I have told you the most important adjustments. There might be some more adjustments also, but for you, these many adjustments will matter. Please take total of this in the second column. In the second column, there is a NP also. In NP, you do additions of these. Okay, you will get C point subtotal. Have you all got subtotal? Means NP plus additions. Now go for D point. Are you ready? Shall we go for D point? So D point is less. What will you less now? You will less items as per explanation, items as per explanation to section 115 JB. Now what are those items? First one, check your P&L credit side. Which side you will check? You will check your profit and loss account credit side. What is unnecessary? First, you will minus amount transferred from reserves. So there are some amounts which are not earned in this year, but from last year's reserves, they are taken to the P&L credit side, so that you will less. So amount transferred from reserves. Next, you will less depreciation debited. Did you see we have added back depreciation debited? You will be allowed to subtract also the depreciation, but you will subtract depreciation debited excluding depreciation on revaluation of assets. On revaluation of assets means unnecessarily, if you have claimed extra depreciation on revaluation of assets, then that you will exclude from subtracting. Means you will subtract the depreciation debited, but excluding depreciation on revaluation of assets. Third, what you will minus brought forward brought forward business loss, brought forward business loss, or unabsorbed depreciation, or unabsorbed depreciation, both things as per books. Brought forward business loss or unabsorbed depreciation as per books, whichever is lower, that you will minus. Are you getting it, friends? Okay. So when you minus all these things, Please take the total in the second column in bracket. So from subtotal, when you minus the total of the less items, what will you get? You will get E point. E point is therefore book profits. Do you agree that you get book profits? Did you all get book profits? Did you understand? 100% did you understand? Wonderful. Now, I will give you one question. We will solve that, and that will be uh, such question would be asked in the exam, and that would be the last question for today. So, are you ready? And then in the upcoming sessions, we will, as usual, we will continue with the practice. Ready? So, this is similar to last exam question. Okay. Friends, ready for last question for today? So it was asked, similar question was asked for 15 marks in the last exam. And yes, such question would be asked by changing the figures. Compute. What you have to do? You have to compute tax liability, but not complete tax liability. You have to compute tax liability under section 115JB. Means you have to just calculate MAT. That is, you have to just calculate minimum alternate tax. Immediately all of you will tell me how much is the MAT percentage. MAT is at dash percent of book profits. So tell me what percent of book profits. So compute tax liability under section 115JB, that is MAT. Very good, Prerna. That is MAT of X private limited, for which AY, for AY 26 27. Okay, from information for FY 25-26, from info for FY 25-26. First point is NP as per P&L. NP as per profit and loss. Okay, say it is rupees 1 crore. How much it is? It is 1 crore. Depreciation debited. Friends, what will you do with depreciation debited? So NP as per P&L, depreciation debited. What will you do with depreciation debited? Please all of you tell me in the chat window. So debited means you will unnecessarily, NP has gone down. So what will you do? Friends, unfortunately, not getting reply from any one of you. What will you do with depreciation debited? Okay. No. Prerna ji, you have debited depreciation. So NP has unnecessarily gone down already. Already NP has gone down. So what will you do? You will have to add so that it comes. I hope you got it, Prerna ji. And others who did not answer, did you get it? That depreciation debited you have to add. See now in the additions, we have written depreciation debited. You understand the logic, Prerna? P&L account is there or statement of P&L is there. and you have got the NP after considering depreciation. Means already depreciation has been debited. I hope you all got it. Only Asiya ji and Prerna ji are involved in the conversation. What about others? Next, what will you do with provision for income tax? Now all of you tell me in chorus, what will you do with provision for income tax? Very good. Asiya ji, very good. So provision for income tax, we will have to add. Next, proposed dividend. Tell me what we will do with proposed dividend. Proposed dividend also you will add because unnecessarily NP has gone down. So proposed dividend is 10 lakhs. Next, amount transferred to general reserve. What will you do with amount transferred to general reserve? Amount transferred to general reserve. Very good. That also you will add. So it is 5 lakhs. And I forgot to tell you one thing in the minus items. In the minus items, there is one more thing. I forgot to tell you that. So I'm just writing it here. Any exempt incomes. Any exempt incomes, you'll have to minus. Any exempt incomes, you'll have to minus, isn't it? So there comes sixth point, agriculture income credited. What will you do with agriculture income credited? Agricultural income credited, what will you do? Agricultural income credited. So agriculture income, as you all know, is fully exempt, isn't it? Yes or no? So it is 10 lakh 50,000. Friends, are you with me? Yes, no? Acha, so Saili, what will you do with agri income? Or anyone else also can tell me what to do with agri income. Very good. You'll have to less it. Fantastic. Then I'll go to other information. Why you are subtracting agri income? Because it is fully exempt and unnecessarily your NP has gone up. Government says you don't have to pay MAT on that. You don't have to pay 15% tax on that. So please put it out. Make sense? Right now, your 1 crore includes this 10 lakh 50,000. Now go to other info. In other information, what do you have? Check. In other information, first point you have is brought forward business loss, brought forward business loss and unabsorbed depreciation and unabsorbed depreciation as per books. Brought forward business loss and unabsorbed depreciation as per books of accounts is rupees 12 lakh and rupees 18 lakh respectively. So can you tell me what will you minus? Will you minus 12 lakh or 18 lakh? So we discussed that we have to minus whichever is lower. So what you will minus? We discussed 12 lakhs. Fantastic. And last point, depreciation on revaluation of assets is 10 lakh. Depreciation on revaluation of assets is rupees 10 lakhs. Did you understand? C, depreciation debited is 20 lakhs. Do you agree? Depreciation debited is 20 lakhs. So whatever you are debited, you are adding back so that you nullify the effect. But you have to minus not full 20 lakhs, but 20 lakhs minus this 10 lakhs. 20 minus 10, 10 lakhs you will minus. Because is depreciation valid or invalid? All of you tell me in the chat window. Depreciation is a valid or invalid thing? Valid expense or invalid expense? Friends, depreciation is a valid expense or invalid expense? It's a valid expense. Very good. But you added that valid expense. That means you disallowed that valid expense. You disallowed that valid expense of 20 lakhs. Do you all agree? Anam, Ankita, Asiya, Prerna, Saili, Priya, do you agree that you have added back that means you have disallowed that valid expense? But why you disallowed that valid expense? Because entire 20 lakhs was not valid. So entire 20 lakhs for time being you disallowed, you added. But how much is valid? Out of 20 lakhs, 10 lakhs is invalid. So how much is valid? So 20 lakhs minus 10 lakhs. 10 lakhs is valid. So that valid amount you will minus. Now is it making sense to all of you? Wonderful, wonderful, fantastic. So again what we are going to do now is we are going to of course solve this. Let's solve this question, okay? Give the heading computation of book profits. Computation of book profits and minimum alternate tax under section 115 JB of Income Tax Act 1961 for X Private Limited, isn't it? For X Private Limited. For assessment year 26-27 in bracket PY 25-26. Clear, all of you? Particulars, and please make two amount columns. So amount in rupees, amount in rupees. Start with, so you will have to calculate book profits first, and on that book profits you will be able to calculate MAT. Okay, so let's go ahead, do that. First point, NP as per profit and loss. So your NP as per profit and loss account or statement of profit and loss, whatever it is 1 crore. So once all of you have got this 1 CR, go to second point, add. Now what will you do? Add items as per explanation 1 to section 115 JB. Now in that, what do you have? Go ahead and check. Depreciation debited. So sub point 1 is depreciation debited. So it is 20 lakh rupees. Next, provision for income tax 30 lakhs. Provision for income tax 30 lakhs. Okay. Then proposed dividend 10 lakhs. Then friends, what you have next? Amount transferred to general reserves 5 lakh. Have you understood till this? So far so good, all of you with me? So basically, depreciation debited, provision for income tax, proposed dividend, amount transferred to general reserve. That's it. These were the amounts that you had to add. So can you take the total of additions? Are you all getting 65 lakhs? Just check and tell me. Are you all getting 65 lakhs? Yes, very good. Take subtotal. Subtotal will be how much? So subtotal will be 1 crore 65 lakhs. Are you all getting 1 crore 65 lakhs? Now friends, go to fourth point. That will be less items as per explanation 1 to section 115 JB. What are those items as per explanation 1 to section 115 JB? So in that, subpoint 1 that you have is, check, agricultural income credited. So what is the agricultural income credited? Agri income credited. You are subtracting it because it is exempt. So how much is that? It is 10 lakh 50,000. What next? Do you have anything else? Brought forward business loss or unabsorbed depreciation, whichever is less. So lower of brought forward business loss and unabsorbed depreciation. So what is lower of brought forward business loss or unabsorbed depreciation? It is 12 lakhs. And friends, lastly, what do you have? Lastly, you have one more thing. Depreciation debited 20 lakhs, but excluding depreciation on revaluation. So you have third point, depreciation debited excluding depreciation on revaluation. So friends, that depreciation debited is 20 lakh less depreciation on revaluation is 10 lakhs. So 20 lakh minus 10 lakh, you will get 10 lakhs. Do you agree? Can you take total of these three? Total of these three is, tell me how much total you're getting of these three. Are you getting 32 lakh 50,000? So if you subtract 32 lakh 50,000, you will get book profits. So can you guide me? What is your book profits? So your book profits will be 1 crore 32 lakh 50,000. Are you all getting 1 crore 32 lakh 50,000 as your book profits? Just confirm, let me know. Yes, no. If you get that as book profits, therefore MAT, MAT at the rate of 15% of book profits. So what is MAT at 15% of book profits? Calculate. Are you getting 19 lakh 87,500? But don't forget that your book profit is exceeding 1 CR. So you will have to add surcharge at 7% as book profit, as book profit is exceeding rupees 1 CR, but it is less than or equal to rupees 10 CR. So can you please calculate surcharge? It will be 19 lakh 87,500 into 7%. Are you getting 1 lakh 39,125? Can you add both? Are you getting 21 lakh 26,625? So 21 lakh 26,625. Just confirm to me in the chat window. You will add in that health and education cess at 4%. So it is 85,065. Are you all getting 85,065? So finally, are we getting 22 lakh 11,690? So friends, 22 lakh 11,690 is total MAT. Therefore, total minimum alternate tax. Say D in the chat window once you get that. And that's it in today's session. Thank you so much. Meet you in next session with further syllabus and further practice on what we have done till now. Thank you.